Well, the better question is, a better answer is I would buy silver today. If I weren't talking to you, I probably would be buying some silver because silver's down and gold is not. So what I would be buying next is more silver. The next time I buy something, which will probably be tomorrow, I'm going to buy more silver. Well, I mean, if commodities are cheap on a historic basis, stocks are not. I mean, silver, I have some silver right here. Silver's down 40% from its all-time high. That's not hysteria when something's down 40%. Gold is making its all-time high. I own some gold. I'm not buying it now, but there are things in the market that are certainly cheaper than some of the stocks that are going up every day. Well, I own an index, but I don't really own platinum and palladium outright. Uh, Partly because I don't know what I'm doing, but also because it seems to me cars and filters are not so in demand as they were maybe 10 years ago. Electric cars have come along, lots of things, technology is changing. Not that I know what I'm talking about, but I do know technology is changing. And maybe that's the one reason we don't need as much platinum and palladium as we did before. Well, perhaps, as I say, I mainly own the Rogers Index, Commodities Index, as a simple way to play most of these things. But from what I read, yes, we are going to all use electric cars someday, electric trucks. And yes, you and I both know that nickel's very involved if we're all going to have nickel electric cars someday.
Hmm.
I don't own nickel except in the index, but maybe I should.
Is
I
there
do
some,
own silver and gold outside the index. Yes, but I have owned gold for 60 or 70 years. I've owned silver for 60 or 70 years. I'm too lazy to sell it, and I want my children to own it someday. I'm an old peasant, and when things go bad, all of us old peasants want some silver in the closet. We want some gold under the bed because we know that the only thing that will save us in disasters are gold and silver. Not the only thing, but a couple of things. I used to own miners. I'm just a little lazy right now to own the miners. I mean, you'll make a staggering amount of money, Antonio, as you know. If you know a company that's going to find gold in Berlin, oh my gosh, you'll make a fortune. I don't know that company, and it's hard work to find those companies. So I mainly just own the real stuff. Well, a better answer is I would buy silver today. If I weren't talking to you, I probably would be buying some silver because silver's down and gold is not. So what I would be buying next is more silver. The next time I buy something, which will probably be tomorrow, I'm going to buy more silver. I do own, by the way, in world history, silver has been more useful than gold in most of world history. I mean, Jesus Christ was sold for 30 pieces of silver, not for 30 pieces of gold. And that's because silver was money in those days and in much of the world. In fact, the American government, when we were set up as an independent nation, we were on a silver standard. It was only decades later that we changed to a gold standard. So don't forget silver when you're looking out the window. Well, we have had hard asset-backed currencies in our lifetimes and for the decades and centuries before that. I don't see it happening now. I mean, many people talk about it, including me, but I'm just afraid that first of all, to implement it is extremely difficult and complicated. And I'm afraid that the pain that the world would have to go through is going to be so bad that people will say, wait a minute, that's too much. Let's try the old way again. And it will take a gigantic crisis, in my view, a gigantic crisis for the world to go to a real hard asset-backed currency. It'd be good if we did it. Happened many times, never worked in the long run. Always in the end, it causes too much pain and the politicians say, okay, let's change. It's too painful, but maybe we'll try it again. I hope. The economy gets soft and weak. To have a strict, if you stop spending gigantic amounts of money, which you would have to do on a hard asset-backed system, they would have to stop spending a lot of money. When you stop spending a lot of easy money, many people suffer. The people who've been getting that money suffer, and then the whole system has to start over again. Or they go soft again. They say, okay, we're not going to cause any more pain. Spend your money. We'll lend it to you. We'll lend you as much money as you need. Well, I know that the world is running out of known supplies of oil. So yes, I had rather own oil and energy than be short it. But I am not short energy now. But I do know that unless something happens pretty quickly, known supplies of oil continue to decline. And that's going to lead to more bull markets in energy in the future. I mean, maybe we're going to stop using petrol. Maybe we're going to stop using coal. We never have. There are people who want to stop it. Maybe we will. But at the moment, I have not shorted coal or oil or natural gas or energy sources. Well, maybe I should hang up and buy natural gas, from what you say, or maybe I should short it. No, I don't see any reason to short energy sources in 2025, 2026. No, the world is running out of known supplies. Maybe we're all going to go into a terrible recession or depression, and energy use will decline or collapse. I don't see that yet. Well, I had rather own sugar than be shorted. I don't have either right now, except in the index. I have owned sugar in the past. I've been investing a long time. I can remember when sugar was 2 cents. That is not a typo. 2 cents. I can also remember when sugar was 64 cents. That's not a typo. Believe it or not, sugar went from 2 cents to 64 cents at one point. You can have pretty dramatic moves. I am neither long nor short sugar right now. If I had to be something, I'd rather be long it than short it today. Well, if you ask me, yes. And also Washington says we have solved inflation. So I know we're going to have more inflation if Washington is telling us everything is okay. No, I mean, Antonio, as you know, there's been huge money printing in the last few years, gigantic money printing. And that has always led to inflation eventually. The central bank in America says we've solved the problem. They've said that many times in my lifetime, many times in history. No, the money printing is unbelievable. The debt for the U.S. government is, I'm glad I'm old. It's a good time to be old because young Americans are going to have huge problems. Huge economic problems with the debt in the future. America's the largest debtor nation in the history of the world, and it gets bigger every day. And I can remember when England went through this kind of problem. England in 1924 was the richest, most powerful country in the world. 50 years later, it was bankrupt. America's on that path. As I say, it's a good time to be an old American. Well, we can talk about the history some more because at least that is real. And what has always happened when countries start losing their currency status, as the British did 50 years ago, or whatever it was, they start putting on exchange controls. If you want to go from London to Paris, you can not take more than 50 pounds or something. It gets pretty rigorous. It gets very debilitating and onerous for the people who are citizens of that country. And we're talking about England, but it's happened with many countries in world history. And it's very difficult just to be a normal human being in those countries. And it's going to happen again. It will be in the U.S. next time. I will say again, the debt in the U.S. is staggering. Just staggering. Something like 40 trillion this year alone is being added to the debt. Now it's an election year, so nobody talks about it. A few talk about it. But I've been around long enough to know that somebody's going to have to talk about it again, because when the market takes over, you don't have to care what central banks say or politicians say, because the market can be pretty vicious and extremely powerful. When the market says, listen, central bank, we don't care what you say. Listen, senator, we don't care. We've heard this before. When the market is in charge, it's vicious. Well, I mean, I haven't done that thorough an examination, but from my experience and my extensive reading of history, no country in world history has ever been as indebted as the U.S. None. And maybe there has been somebody, but the reason we don't hear about them is because they disappeared, or they suffered very badly. Yes, Britain went from extremely powerful to bankrupt, but we know about that. It has happened to other countries too in history. You can remember, or at least some of us can remember, that Britain was very powerful and went completely bankrupt in 1976. I mean, totally bankrupt. The IMF had to fly into London to help them pay their bills. Now, Margaret Thatcher came along and helped bail them out, and she took a lot of credit and she did some good things. But the real thing that bailed out England was the North Sea oil started flowing in 1979. So, Antonio, if you give me the largest oil field in the world, I'll show you a very good time. We'll have a lot of fun. And that's what happened to Britain. One reason Britain is still there because they discovered the North Sea oil, and that saved them. America doesn't have a North Sea oil. We're already the largest producer of oil in the world. I don't think we can get much more. So I don't know what can save the U.S. Again, I am an American citizen, so I don't like saying any of this, but no country in world history has ever been so indebted as the U.S., and the debt gets higher every day. And, it's not just the debt that's published. There's a lot of off-balance sheet debt in the U.S. I mean, Social Security is not on the balance sheet, but there are millions of old Americans who have to get paid, who've been promised. Lots of offshore or off-balance sheet obligations, which are going to make America suffer. Unfortunately, history shows you have to pay your bills someday. As recently as 30 or 40 years ago, the U.S. was still a creditor nation. But now we're the largest debtor nation in the history of the world. That's happened in only a few decades.
Investment lessons. From Jim Rogers' extensive market commentary, a crucial investment philosophy emerges about recognizing true value rather than chasing market highs. Rogers emphasizes the importance of identifying undervalued assets, particularly highlighting silver as an example. While gold reaches new highs, he points out that silver is trading 40% below its all-time peak, making it a more attractive investment. This approach of seeking assets that are cheap on a historic basis, rather than following the crowd into expensive markets like stocks, demonstrates the classic value investing principle of buying low and avoiding overvalued assets. Understanding long-term debt cycles and their profound impact on economies and markets stands as another critical insight from Rogers' experience. He draws particular attention to the unprecedented U.S. debt levels, drawing a sobering parallel to Britain's historical decline from global power to bankruptcy in the 1970s. His analysis suggests that excessive debt and continued money printing inevitably lead to inflation, regardless of reassurances from authorities. This historical perspective provides a framework for understanding how major economic shifts can unfold over decades and how investors might position themselves accordingly. The enduring value of hard assets as financial protection is a cornerstone of Rogers' investment philosophy. He has maintained his holdings in physical precious metals, particularly gold and silver, for over 60 years and plans to pass them to his children. His perspective is deeply rooted in historical precedent, noting how precious metals have consistently served as a form of financial insurance during economic crises throughout history. He particularly emphasizes silver's historical significance as money, from biblical times through early American history, suggesting that these metals continue to serve as a reliable store of value during uncertain times.